Hello everyone, welcome back. Patrick here. In this video, we are going to review FTCV that's going to merge with eToro. This is Betsy Cohen's latest SPAC. It is kind of a competitor to Robinhood, kind of, but more international. So let's get into that. You guys know the format for these reviews. I'm going to talk about what the company was doing before, where they're going after the merger, the revenues and financials, and then the valuation and how I'm going to be playing the stock. So let's get started. But of course, please like and subscribe, and it really helps out. Thank you. All right, friends, I have to say that right now I'm not super excited about SPACs. I just feel like there's too many of them and the quality is going down. So we are going to have to sift through many of them to find the hidden gems. Is eToro one of them? That's what we'll figure out today together. So eToro is a brokerage company from Israel. They expanded into Europe and Asia mostly. They don't have a big presence in the United States right now, but they're kind of like the Robinhood of the rest of the world in a sense. So if you look at the US websites, you can see that you can trade crypto right now, but stocks are coming, so they're not implemented yet. That's one of the downsides to this. Like, I haven't had a lot of experience with eToro. I've seen it before, I've seen commercials and everything, but I can't say that I tested the product and I can't comment on if it's good or not. I know I have a lot of viewers from Europe. Let me know in the comments if you guys actually enjoy it. Like, is this a good brokerage or not? Now, if we look at the details of the deal, it was valued at $10.4 billion, and this is one of the big problems with the deal. Apparently, it's settled too high, and we'll see in the valuation later in the video. This is Betsy Cohen's fifth SPAC, as far as I know, and so far, if we're being objective, she hasn't had a lot of success with her SPACs, so keep that in mind throughout the rest of the video. They added 5 million users in 2020. So again, kind of like Robinhood, that boom with the small retail investors. So they benefited from that in the rest of the world. And then they're going to get 650 million in PIPE investors. So this is a fairly big deal. It's one of the more high profile SPACs that we've had in the past month, but we'll have to see if it's priced appropriately or not. So eToro at a glance, 605 million revenues last year, 1.2 million funded account, 1,100 employees, and as you guys can see, the distribution of their funded accounts is mostly Europe at 69%, Asia 18%, so they don't have a very big presence in North America yet, but still, even in the past couple of months, if you look from 2019 to 2020, almost 5 million accounts, that's massive. And then from 2020 to 2021 in January, they added another 1.2 million accounts. So that is a lot, right? So they do have some growth. Now let's look at the rest of the business. One of the cool things about eToro is that they're trying to bring you that Robinhood experience of really easy, quick access to the stock market that people really like, with a clean interface that looks something like this. Very minimal, very easy to use. I'm guessing you probably just swipe to buy stocks, and people really like that, especially the younger generation. So now another thing that they're adding to that, right, what sets them apart a little bit, and I think that SoFi is copying them, is that they're trying to add a social network on top of it. Something like this, right? So you can actually, oh my God, the nightmare. It's like a StockTwits on top of your brokerage account, so people can share their opinion. Imagine the echo chamber of pumping that must be happening on eToro, where everyone is trying to pump my stock is going to the moon, plus 10,000% in 2 weeks. You know, it must be pretty interesting and pretty funny. But the third aspect, which I find much more interesting, is that you can copy other people's trades. And this is the social proof aspect is extremely important. A lot of people really like to follow what other successful investors are doing. Like, how often do you hear, oh, Warren Buffett invested in XYZ companies, that must be a great trade. So a lot of people are going to be buying into it. Apparently, a lot of people are finding success with it, and it is going to be fairly popular, in my opinion. Right? So according to them, that's really helped the numbers. So 34 years old is the median age, but 9 minutes is the session durations, and people on average log in 4 times a day. So when you combine all of that, it does seem like it is a pretty cool feature. And I think that they're trying to build that social network atmosphere when you're really trying to have people get on your app for as long as possible, as many times as possible per day. So that really brings a lot of different ways to monetize the app over time. Look at how that's what Facebook did before, right? So Facebook's not a brokerage, of course, but you want your users to be really engaged and interacting in your app, and that's how you're going to monetize it over the next few years. So I really like that about the company. I think that is a positive. Another thing that the company does really well is advertisement to acquire new users. So I've seen some of their ads. I think they're okay, but a lot of people find them very cringy. But in the end, it doesn't really matter. All that matters is that they're successful attracting new users. And really, if you look at it, they spent $221 million in 2020 for their marketing, and they're going to generate $998 million from their users over the next 6 years. So a 5-to-1 ratio like this is excellent in marketing. I mean, I wish I could get results like these. And when you look at the stats, you can see that the cost per registration is going down. That is very, very good. So $52 to $41 to $31 in January. So as the brand becomes better known throughout the world, it's going to help them lower the cost per user, like the cost of acquisition, and that's going to increase their margin. That is what you want to see, like that type of progression. So they're doing this very well, it looks like. Their monthly trades have actually tripled over the past year. That, once again, is very, very good. But the thing is that has also a dark side for us as investors. Because, yeah, when they present the numbers like these, it looks great, right? You're seeing growth. But the issue, though, is that right now, we're at a weak spot for SPACs. You guys know this. There's just hundreds of them looking for targets. And at the other end, you have this company that is kind of like at its peak right now. There's never been a time in the stock market, in my, as far as I know, that has been as bullish as the past 12 months. From March to this March of last year to this year, I mean, it has been an incredible bull run that's added millions and millions of users in the stock market. Well, you're not going to see tripling like that every year. That's unsustainable. So you have the company that is at its peak with the SPACs that are at their lowest, right? You have multiple companies fighting for the same targets, so they're going to overbid each other and pretty much overpay. So you have the recipe for probably a bad investment. That's the downside to it. Right now, everyone says it's all about hype. Well, now this month, we realize that valuation really matters, right? If you don't want to be down 50% in your investment. So that's why we'll look at it a little bit more in the valuation, but keep that in mind. Like the fact that the company is at its peak right now in terms of growth, it makes it so that the deal is not going to be as attractive. All right, so if we look at how they generate revenue, it's kind of the same way as Robinhood. So they make money from the spread, which is the difference between the buy and sell. So nothing is free in this world. Yeah, you use the app for free, but they have to make money somehow. So the spread is worse than on some of the other platforms. They also make some money from interest on margin and currency conversion and other income. So those are the main ways that the company generates money so far. When you look at this graph, you really get a good history of the company. In 2019, they had a pretty big crash in their revenues. Well, that's explained by the bubble in crypto in 2017 and 2018 that made up a big part of their revenues. So it seems like their user base is very crypto oriented. So maybe a lot of traders, a lot of people holding crypto in their, I don't know if they have wallets or however eToro handles them, right? And then when the bubble popped in 2018, they lost a lot of users. So in 2020, they recovered. But again, a lot of people say, and myself included, that we are in another bubble right now that might pop at some point this year. We're starting to see a lot more instability in the market. So are we going to see another huge trend upward? So according to them, right, they're lowering their expectations in the funding of accounts from 97%, in the past year to 38%, and then 30%, and then 30%. That would still be very good, very, very solid compared to the other fintech companies. I mean, anytime you reach 2 digits, but like 30% or more, that's considered like very, very strong. But are they going to be able to do that, right? If there's a lot of instability this year. You guys know just in the past month, I can see it from my viewers, we've lost a lot of interest in investing. So it's going to be very different, like their numbers between January and March, in my opinion. Of course, that's just what I see happening, right? We'll have to see the final numbers, but I don't expect them to be able to sustain a massive growth like they've had in the past year. So their numbers, though, if you look at it, I mean, they have been increasing every year except for 2019, where it dropped from 369 to 244. They did 605 in the past year. And then this kind of shows you their model for their revenue per user. And look at how in 2017, when there was that crypto bubble, their average revenues per user was much, much higher. And right now it seems like they're declining. So yes, they're getting a lot of new users, but each user is generating less revenues per. So you can see the little orange line. Hopefully you guys can see it. I mean, this is for 2020, right? So even though they got a lot more users, they're going down as far as the amount that they're generating. And this is their model right now, the green line, where it's even lower than this. So 576, 902, and then 1,138 after like 3 years. So still good, I mean, but as you can see, like the numbers can be a little deceiving. As far as their projections for the next few years, they would make $1.018 billion in revenues this year. Then this would grow by 17%, 30%, 28, and 28, with $2.5 billion in 2025, which we've talked about before in other videos. Right now, we know that all of these are very speculative. We don't know if they'll be able to match these numbers. So it's better to like keep track of 21, 22. Those are going to be much more accurate than 5 years down the road. But still, if you look at it, right, their net revenues and then after that, their EBITDA is still pretty good. I mean, for SPACs, we keep seeing SPACs are losing money. Well, this one this year is going to be $15 million EBITDA positive, and that should increase over the next few years. Whether they meet their projections or not, they're still going to be fairly successful, and at least they'll be generating some top-line revenue and then some positive EBITDA, right? So that would jump to potentially 700 million in 2025 for a 32.5% gross margin. That would be pretty good. Now for the valuation, they are at $12.35 billion with a share price of $12.90. So right now we are in a SPAC attack. The share price is already dropping even one day after the merger was announced. So yesterday it went up to about $15. Now it's retracing. So it's lost 15.63% today. So what do you need to know about the pro forma? So the company is going to receive $796 million that's going to be added to its balance sheet. That's pretty good. It's going to help them fund their growth over the next few years, give them a lot of safety, and maybe they'll be able to use that to get market penetration in the United States once they add the stocks and all of that, their brokerage. But aside from that, what you need to know is that we are only getting 2.4% of the company, the SPAC shareholders. That is very, very small, and a lot of people are kind of frustrated about that. Especially when you look, the PIPE is only getting 6.2%, so we're way under the PIPE and way under the regular eToro shareholders. So basically, we won't have any say in the company. That's pretty much what it amounts to, right? And that can be good and bad in the sense of, like, there's not going to be as much dilution for the SPAC shareholders since we almost don't control anything, right? And the PIPE investors, even if there's a sell-off after the lockout period, well, they control so little shares that's not going to have that much of an effect like we've seen in some of the other SPACs. Now, aside from that, right, there is an exercisable 40 million eToro shares that is going to be depending on the share price. So that's going to be unlocked 50%, so 20 million shares, if the share price goes above $15 in the first 30 months, so 2.5 years. And then 50% if it goes above $17.50 in the first 5 years. So again, that's more dilution, and none of these include all the warrants and all the different extras that are attached to these kind of transactions. So we can expect that there's going to be some dilution in the next year or two, right? And there's not, like, the transaction is not that great as far as the structure for the individual shareholders. All right, guys, in the wrap up, let's look at some charts. What's my opinion and how am I going to be playing it? Well, first, it is at 1290. and they dropped 15% today, so that's not great. And if you look at the chart, you can see that yesterday they had a pretty nice pop. And this is a good sign because eToro is not a blockbuster, it's not a unicorn or anything, but it is one of the more high-profile SPAC merger targets that we've seen over the past month. And people were looking forward to this. And actually, they did bid it up to over $15, so that's a positive sign that there is some interest in the company. However, with us being in a SPAC attack right now, where none of them really have any momentum, well, it's already going down, and that's not what you want to see, of course. So if you look at MACD, there's a cross on the hourly chart. It is down already, so there's more sellers than buyers. And if you look at volume, I mean, the volume already died in one day, which is not what you want to see, right? You want to see a lot of buyers interested in this company and the volume at least staying still for a week or something. So that's not great signs. It's not any fault of eToro or anything. The company seems like it's pretty good. I like a lot of aspects of it, right? If you compare the valuations, it's fairly similar to SoFi. So about 12 billion to 16 billion right now. So depending on if you have a position in one, you might not want a position in the other. Like I'm invested in SoFi, so I wouldn't buy this, especially in the long term. But, you know, we're just kind of caught in between a rock and a hard place right now with the market being the way it is. Even if the company is decent, I wouldn't pay $12.90 for it because I think that it's going to go back under like $11 or at most 12, right? Same for the warrants at 364. I mean, it's like throwing money out the window. I don't think it's going to go higher than this. But keep in mind, right, I'm doing this review based on the information that I have today. In a couple months, SPACs might turn around and all of a sudden everything's going up. And then this might be a great opportunity, depending on when you guys watch the video. So, you know, everyone's going to have their $1,400 check and maybe all of a sudden SPACs are back in style and everyone is FOMOing into them. So keep that in mind. I like the company. It's just that right now, I don't feel like it's the best time for this type of play. So that's basically what I think about the company. I hope you guys enjoy it. Let me know in the comments what you think, right? Do you think this is going to be great long term, but not as great short term, kind of like I do? So let me know in the comments and I'll see you guys in the next video.